Hey, welcome everyone. My name is Josh. We are going to break down or look at some different tickers today on how to find the right stocks to get into, what criteria to look for so we can consistently be profitable in the market. All right, so before we get started, I wanted to invite you out to our virtual trading chat room. This is where we go live each and every day to answer your questions, and sometimes we even take trades together. You can get there by clicking the first link in the description box below. This reroutes you to our Discord server, absolutely free. This is also where we update and announce when we're going live. So I hope to see you in there. So what does it take to find the next stock to trade? What's the next good deal? How can we be more consistently profitable in the market? Well, I would say that finding the same criterias over and over is essential to you being successful in the market. And what I mean by that is we want to find something. In many cases, there's a couple different patterns I recommend for beginners. First, it's the horizontal pattern, okay? So a pattern that goes up and down and it gets bought off the same spot in the chart, which would be known as a support, and it goes up to a high, which would be known as a resistance. The other type of pattern that I like to look for is something that is continually trending in one direction or another. Since it's a bullish market, obviously the market's been trending up. Most of the stocks continue to trend up. And so we want to find something that is continually trending up. And as it's trending up, as we can find and identify the highs and the low points in the chart, we want to wait till the stock pulls back, gives us a certain indication, right? We want to wait for maybe a confirmation of some sort by learning how to read the chart, learning how to read the candlesticks. This is going to give us an idea of when to get into our positions. This is also going to give us an idea of when to cut losses. And this is going to give us an idea of when to actually take profit in the market, okay? And so we're going to go over a couple stocks. I'm going to explain it a little bit so you can see it on the charts instead of this fancy drawing I've done. And that way you get an idea. So I picked out a few stocks that I see value in. First and foremost, we're looking at CRM. It's a little on the expensive side, $225 a share at this point, but it does offer some good potential for margin of growth in your account. So if we were to get in, for example, right now, and I'll explain when and why and where I expect the stock to kind of go and what I am looking for. I'm not necessarily saying just to buy it right now, but if we were to measure and say our stop loss is at the low, it'd be around $9.40, or a 4.2% loss in the account, if that's how much we were taking a loss. But the amount that we have, the amount of gain that we can have for a recovery is quite a bit. It's $39 or 17% in our account. So we'd be risking roughly around 4% to get a 17% return on the money that is invested into the stock, okay? And I like going off percentage growth, okay? We don't want to necessarily go off of how much money we're making at the beginning because sometimes we're trading with smaller accounts. It's more important in many cases just to go off of the percentage growth that we can have a return on. Now, in real estate, for example, 12 to 17% on our money per year is phenomenal. We can make 12 to 17% in a week, in a couple of days in the stock market, to give you an idea. So percentage growth is something we want to focus on. So CRM, let's break down CRM, give you an idea and an understanding of what we're seeing. So remember, we're looking at a horizontal pattern. So if we break down the horizontal chart, it goes up, it goes down, it goes up, and so on, just like this. So we get an idea of the low points in the chart and the high points in the chart, just like the fancy drawing earlier. So let's look, and now let's break it down a little bit on the more technical side, because if you had noticed, we are quite a bit under what would be known as the support. So how we want to take this and how we want to kind of look at this particular trade is we want to go, okay, let's mark out what I call our buy zones and our supply and demand, right, in the market. This is where we get to learn how to trade alongside the big banks, knowing that it's at a specific low price in the chart. And this is where potential buyers may come in at. And then where highs are at would be where the sellers or where people don't find the stock to be attractive anymore, or the company that they're investing in. And so they go ahead and they sell their stock price, which drives the stock price back down. So if we look at the potential low points in the chart, and these are certain patterns that I look for, and we teach in the Accelerator program in Trading in a Nutshell, where it comes down and it has this consolidation sideways and it starts to move higher. This to me would be a confirmation in a sense. This would be confirmation in a sense because it comes down and it starts to find a base. We can start reading each one of these candlesticks to understand which direction the stock may continue. So let's go ahead and put our buy zone in, right? This would be demand in the market or for this particular stock. And how I find that is by reading the candlestick. So you wouldn't be able to know it unless you do start to learn how to read the candlestick. So this would be a support. It sells off into it. We find a bounce here. It bounces back up, sells back down. We get another bounce and so forth and so on. Okay, so we also have some resistance here. And it's resistance because it's above the stock. But I'm getting that resistance because this is the low point, this is the high point, low point and high point. Now it does continue higher, and so we find another resistance, right, for this particular stock. Once again, CRM, okay? So this would be the areas that I'm watching for. Now this also shows because of earnings, we had an aggressive sell-off. Now since we had the sell-off, that shows me that maybe the company wasn't performing quite as well as what it should have been. But also, this gives us plenty of margin for profit to the upside. If people still like CRM and it's still a good company, it just maybe had a panic sell in the opposite direction, giving us the opportunity for a better deal. So all I'm going to do is I'm going to also put a buy zone down here. The reason why is because we're finding buyers coming in at this particular point. This is also, if you look further back in the chart, this is where sellers were at that drove the price of the stock down, and where we built the pattern before the big move higher, which was also due to earnings prior to this. Okay, so we are in this area. If the earnings pushed the stock price up, they did well. And now all it's done is do a horizontal pattern sideways. And now earnings brought the stock price back down to the original earnings spot. The potential of this company still seems to be fairly decent. Okay, so what we're doing is we are now waiting for confirmation of some sort. Now, during the live chat room on Friday, we brought this up. We actually have a recording telling you when the best spot was to get in this particular stock at this price zone of around $223. What we're wanting to do is we go, okay, if we're playing support and resistance or supply and demand, each time we now find the stock price or the stock price finds a support, and it gets underneath that support, it now becomes or acts as resistance in the stock. So if we look at it and we start to measure, we go, okay, if we're going to get in to roughly around $224.50, we would be risking the low. We want to go all the way down to that wick, all the way down to the wick of the candlestick. That would be our stop loss. We'd be risking $9 in the trade or 4%. Now the profit of margin to where this has been rejected or where it's found support before, which now would be resistance, we would potentially have about a 6% return or be able to make around $13. Now, the overall recovery pattern would be $19 or 19% or $43. So that's how we want to identify a stock that has been trending up or in a horizontal pattern, and where we can identify clear low points and clear high points in the chart. Okay. So let's move on to BJ. Now BJ I find to be attractive. Once again, a horizontal pattern going sideways. So we have clear lows. So if we look further back in the chart, this is where it was rejected before, where it had to pull back. So it became resistance. And once it got over this level, if we put our demand zone in, or in this case, talking about it would be a supply zone, if we went ahead and put our zone in, once we got over this price point, it pulls back, uses it as support, and continues to bounce there. Every single time the stock price gets down to around $38, there are buyers there to keep the stock price up. Now, if we were to watch the stock price move higher, where would be the price point we'd want to sell? Well, it seems to get rejected right around $42 quite often. So we would want to put our sell zone into roughly around $42 because that's where sellers generally find the stock price not to be as attractive. So now we actually have a buy point where it looks to me like we're getting some kind of a pattern that's showing that there is a base. We found a base, it pulls up, goes up to 50%, it gets rejected, but we now find another base and we are hanging out at the top of the zone. So this tells me that anything that comes up, maybe pulls back into 38, 38.60, I would most likely be a buyer for potential of, let's see what we can get. Lower the candle, lower the wick, because you want to put your stop under the wick because that's where buyers came in last to keep the stock price up. Now, it makes sense to put your stop underneath the candle wick because that's where we would have protection from other buyers. That's where buyers showed up before. So it makes sense to put our stop loss underneath the wick. So let's go ahead and measure it. We went ahead. This is a 3% loss in the account, or 3% loss on the dollar amount invested, or a $1.26 loss if you're going off of the dollar, how much the stock price would move down, right? Now, the potential for growth in the account would be a 7.5% potential of growth, or a $2.80 move in the opposite direction. Okay, so we want to make sure that we're risking a lot less than what we're looking at making. And if we get up to this price point and we take off maybe half the position, or if we're following our candlestick, the power candlesticks up, putting our stop losses underneath each candlestick, etc., then we could potentially see, okay, this doesn't mean it does not mean that the stock price has to get up to here, but we could potentially see highs of $44, okay, $44.50. That gives us obviously a much better reward. We're still risking the same amount, around 3%, to get roughly around a 13% gain in the account. If we can continue going, the overall high would be all the way up to around $50 or $47, and this would obviously give us a much bigger reward in the account as well. So still risking 3%, but the possible potential doesn't mean it has to go back to new highs. It offers a 21% gain in the account. So let's move on real quick. I gotta continue. Let's see, DLTH would be another one that we're paying attention to. And it's kind of something similar. Earnings drove the stock price down. This is a less expensive stock, right around $11. So many of you guys may find this to be attractive. We already have the reversal pattern. We have not found a double bottom. There is no kind of base, but it is showing some signs of a reversal. So if we go ahead and we put our first buy area in there where we're finding new buyers to step in, which makes sense because this is where the stock price has bounced before. We had a consolidation before getting over, push above, used it as support, it pushed up, came back down, used it as support. Now, we can also start looking and go, okay, where did we find sellers? This was a big, huge rejection price for the stock. So we could say, okay, right around this price level is where we will find sellers. This is also where we found another pattern in order to continue pushing higher. So as we keep breaking down the chart and going, this is where our supply and our demand zones are at, we now have an understanding of where, again, just like we did in the last couple of charts, on what we would be risking and what we would be gaining in the account. So if we get in at the top of the zone roughly, or if we find some kind of a double bottom or some type of a base and we start trending up and we break that $11, $12 mark, we would be risking around 80 cents or 6%. Okay, so we want to do the math. You always want to do the math to figure out how much money you're willing to lose more than you're willing to make. You want to be able to cut your losses accordingly. There should be no back holding. Okay, we don't want to continue to hold onto a stock that continues to sell off and loses us money. We want to understand where other buyers come into the market. We want to use those buyers as protection. If there are no buyers there, if there is no big money coming from the hedge funds there, then we don't need to be in the trades either. They're not in the trades. We don't need to be in the trades. We want to learn to trade alongside those big banks and those hedge funds, so we are protected with them and we get to run alongside them to make the money as well, right? And so now the potential for profit, it's around a 12% or $1.50. And if it gets up to the second profit target, we're looking at a margin of 23%. And if it reaches all the way back to the highs, 17, there is a 43% profit potential gain in the account. It does not mean it has to go that high though. So we want to be able to manage our risk and manage our money in the trade. So following each candlestick up, moving our stop losses above each resistance, or excuse me, each support level, and continuing to follow our stops up would be the way to go ahead and do this. So there's a couple of stocks to kind of check out. Those are some good deals. They offer the same exact patterns going over and over, where maybe the stock is trending up. Now it's in maybe a horizontal pattern going sideways. We find it to be a good deal. In many cases, it's earnings that brings it down. And it doesn't mean it's a bad company. It just means that they did not find it attractive after their earnings report. So it gave us an opportunity to invest at a lower price in the stock. Now, we just don't want to start buying it because it could continue lower. They could have serious issues, fundamental issues with the company. So we want to wait for that confirmation. Again, I want to go live with you. We're going to check these stocks out. You can ask me questions. We're going to see each other face to face. That way we are actually interactive. It's not just a matter of typing in the question or the comment box below, and then I read the comments and I answer the question. You're actually going to be able to talk with me. And that way we can, maybe you have more than one question, and that way we can get all your questions answered, and we can potentially also be taking trades together. I hope this was useful. Give me a thumbs up on the video. We're brand new to YouTube. Subscribe, share, help us out, help the YouTube algorithm out. Other than that, if you have questions, concerns, or comments, leave them in the box below, and I will see you in the next video.